Here is a weekly Dow chart. It is Saturday morning for those MMTs that are here, and for the ones that view the live Dow analysis. Is once again, my friends, we were overbought here on the Dow when I said in the beginning, late April, the last week of April, correction was around the corner, in May, I said we were going down on 5-1. Since 5-1, and if you don't want to believe it, that's on you. Go look at the live video analysis. And if you don't want to believe that, then I don't know what you're going to do for yourself. I will tell you, though, when we called this overbought market on the Dow Jones on a weekly public indicator, we were at 93.11%. We also knew that this last week trade, which was the last trading week, that on the website, correction around the corner. Boy, what does that mean? Correction around the corner, what does that mean? Wow, what does that mean? It meant that the bull rally needed to pull back. And when bull rallies pull back, then the bull is crying all the way to the bank. Because the bull, if the bull could get away with it, we'd be at 50,000 on the Dow. The thing of it is, it's a controlled environment between buyers and sellers, between overbought and oversold markets. The public, you need to come to a grip, and you need to learn it. Why did we call the top? Why did we say we had to correct? Nobody said this was a bear market. A bull rally, overbought bull rally needs to come back. So the amount of exuberance up here at 93% on this weekly chart right here, right now, it's at 66.13%. And I will not sit here and say that we're overbought, because we're not. We are not overbought. We were overbought here. And 5 weeks, we have been right week after week. Some of them are narrow ranges. It doesn't matter. I'm below the 10-week. I'm falling through the 20-week. We're going to come down here. That was the last correction here. These lows down here. And we're going to see just if we break the 2011 low over here, that's about 11.6. The last time that we got below the 10-week, we hit that red line. That's that 20-week. Right now, we're selling through it. We're going to start Monday again, and we're going to see that if the stock market orders and more selling would consist all the way back down to these bottoms down here, should that be the case. When the pullback will be over when we do this right here. When we got below the 10-week, the following week, we got right back above it. That meant that this bull rally pullback was over. And this one started that you can go to the stockmarketfunding.com homepage right now and find the truth that we said in February that you were going to have a bull rally pullback. And we did. 4 weeks. This one's 5 weeks. But notice that the top here was 12.8 and the low was 12.1. We've had about a 700-point correction on the Dow throughout the month of May. And that until you are back above the blue line, which is the 10-week moving average, the Dow will be trading at lower ranges back to higher ranges at lower areas of markets. This bull rally is going to have to close above the red line and the blue line as it did over here on its reversals, and we rallied up and made another high. Now, on the daily chart, you're falling through the 100-day simple moving average. The last 3 sell days are down. You are on a blue bar right here is a moving average convergence divergence, all a public indicator. Now, when I was overbought here, MMTs, we were 93.2% overbought, and we needed a big bull rally pullback from the bull rally 52-week high to the bull rally pullback that is below all key simple moving averages that the public will make decisions on. you're below the 100-day moving average. Okay? The Dow is not overbought on a daily because it's at 15.88% DS versus 93. And once again, these big investors and institutional traders intraday and hedge fund managers start to buy these low levels. And in cycle of overbought and oversold, it's very important to understand where that is, because what's going to end up happening is we're going to come down and we're going to hit a bottom and we're going to reverse, because we're going to get the opposite of being overbought, is we're going to get short-term oversold. And when you are short-term oversold with leadership stocks in the S&P 100, leadership stocks in the S&P 500. I said leadership. I did not say stocks that don't make earnings. I said leadership stocks qualify, and the ones that are not leadership are non-qualifiers. S&P 400. Leadership. S&P 600. Small cap will be some really nice rallies. So if we're going to have a summer rally, we're going to get to an oversold condition that we would have a summer rally, and that bull would jump right back in full steam. Now, you cannot have a summer rally, and generally summer rallies start in July, is you cannot have a summer rally when you're up here at 93%, but you can have a summer rally when you get down here at 10 or 12%, and that is short-term oversold that would lock and load a reversal bull rally to the upside, because we're not up here no more. We're getting down here where you can start buying good stocks intraday, and when that bull rally starts again, that means that the intraday drop, when you get your entries, are going to just burn right off of that bottom and keep going and not looking back. There will be a market momentum change from overbought to oversold that creates big short squeeze rallies. It creates buying opportunities. It creates all the good things that we want to have happen, because now we're not vulnerable up here at 93%, and our vulnerability to the index is extremely lower levels than it was then, my friends, and that's the Dow Jones. Let it be known that we will hit a short-term oversold weekly and daily, and that we will buy the good crop of stocks that move off of that bottom and rip off of there, and MMTs get paid. And it's around the corner, and at every market bottom there is volatility, and at every market top up here there is volatility. And you can be overbought for a period of time. The reversal, all of the analysis, everything that stock market funding has said has proved to be true before it happened, whether you want to believe it or not. That's the end of the conclusion of the Dow. We are now going to reach a daily overbought cycle where the bear is going to get himself in trouble. Because when you get to that short-term oversold condition, that bear is going to have a problem. Because what's going to happen is you're going to hit that lower end of that tape, and that ripping bull is going to come back in. Yeah, granted the jobs report was bad. Granted stuff was going on in the Middle East. Granted this and granted that. But right now in this bull rally, I didn't say bull market. I didn't say bull economy. I said rally. It's a bull rally with a pullback again. And what happens with the people that are not professional, to have the wisdom to know the difference, is that the bull stays stuck up here and the bear stays stuck down here. Then they go up and the bear is in bad shape. Up here, the bull is in bad shape. And over here, falling through the weekly moving averages is going to create a sentiment where we could get the last part of the near-term oversold condition into play. And if we break below here and gap down, it will cause some more selling down. Yes, but the selling is getting closer to being done because we've already had what SMF said, 93.11% with the 5-week reversal. Go back and look at the homepage, look at all the indexes, whether it's the Dow, whether it's the S&P, whether it's the NASDAQ comp, whether it's the S&P 100, whether it's the sector indices, whatever you want to look at, it's all was done before the fact. Let us not be in denial, Mr. Investor, but let us be empowered with overbought and oversold short-term conditions, what our bull rally is about, how do markets price news in, and how does the bear start getting heavier weighted than the bull? Well, the bear better be careful, because when we come down here and we don't break that support line, or we don't break that support line, or we come all the way down here to hit that 50-day moving average on the Dow, which is exactly 11,426, which would be slightly a little bit lower low than that last low of the year right there. Welcome to the Dow Jones MMTs. Welcome that we will do lots of training now during the actual trading week, so that when we hit a number in our alarm system as to where the shorts would cover and bull rallies will happen, and let it be known that the last part of any selling toward an oversold condition exasperates itself, and they generally exasperate themselves when you're falling below the 10-week and the 20-week, and not to mention that 100-day simple moving average has been violated. That's going to put the other bulls up in a big frenzy. But you know what will end up happening is there'll be a bull reversal. They'll be left out of it because of their thought pattern. The bear is going to get killed because he's going to think that the doom and gloom is still here. No, there wasn't any doom and gloom. Overbought, oversold, Dow Jones, the analysis, MMTs are instructed by Mario to go look at all of their indexes that they've been trained on since the top of that reversal there, the weekly reversal there. Why were we right? Why were other people wrong? We had over 100 stocks that were overbought that would come down, and every one of them were shorts, and every one of them paid. Not one did not pay.